What's going on, YouTube? Stocks by the numbers. Welcome back. It's Tuesday. I wanted to do a quick update as per request. FuelCell Energy, ticker symbol FCEL, listed here on the NASDAQ. Stock right now flat, $1.14. Looking at the 1 year, and you can see we're kind of holding this fib right here of 114. But back here, September 13th, was the last time I made a video. And it was mid-afternoon. There was still a couple of hours left, but I was talking about a potential double bottom at $1.31. And let me zoom in a little so you see. And as you can see the bottom of the screen, 130, 230, 330. You can see that later throughout the afternoon, it happened to break that trend line, and it closed below 131, meaning it canceled out that double bottom potential bull pop and obviously continued to sell off. Now we have multiple tests of this bottom trend line. Look at this. Multiple tests. We had a little rally up to about $1.44, and then we kind of just immediately gave it back. Not only giving it back, top of the screen, O, the H, the L, the C, the open, the high, the low, the close. You can see the low, 98.13 cents. And then from that point, we began to climb up all the way to $1.28. And in my opinion, it is because of this random market rally. Now, I appreciate the fact that some people may comment, oh, this rally is, justified or whatever. Long story short, basically, when you have kind of a crappy company like this and you see it get pumped with the rest of the market, that in my opinion, I used to look for plays like that, right? Because we know this is like probably going back down to $1. So now it's up at 128. So if you wanted, you could short it. You can make yourself a couple of quick bucks. And I think like that across the board. I'm not just beating up FuelCell here. But more importantly, what are we seeing here in the chart? And how could we play it? Well, in my opinion, you're really not seeing anything in the chart. The one thing that does stand out to me is the fact that even after these pumps, you can see that it basically immediately rejects this 20-day moving average and drops right back down. So the stock, even going back, I think I may have spoken about this last time too. You can even see here, look, we had a small time frame here, maybe just a couple of days, where the stock was climbing up above the moving average and then just immediately gave it back. We had a few days above, and then we immediately went below, right? 1 day above, and we were below. Before that, we were consistently below, right? We had a little window here coming, bouncing around. Look at this. But you can see predominantly, little piece there, predominantly below the moving average. This is what I'm trying to explain to you guys. We have a stock trending downward with downward momentum. So what the hell am I trying to say? What I'm trying to say is, you need positive catalysts, and you need them, keyword here, keyword, you need them consistently. And I will preach until all of the oxygen has left my lungs. I will try to explain this to you guys every day in every video if I have to. It is about consistency. What am I talking about? Well, we go back last quarter and we can see estimates went down to 27.68 million and the company missed by a couple of million. And then you go before that, estimates of only 25.5 million, the company randomly beats by 50% and comes in with almost 13 million above expectations. And then the quarter before, same thing, 26.85, and the company comes in with 10 million extra. Phenomenal, fantastic. Now we go to the quarter before. Estimates jump up, they missed by 6.5 million. And the quarter before, they beat by 7 million. And now look, the quarter before, they missed by 50%. It's like, what are they doing? And more importantly, what I'd like to know is, who the hell are these analysts who are coming up with these estimations? How can you just be so off? But anyway, speaking of analysts, as we see here, UBS adjusts FuelCell Energy price target to $1.40 from $2.75, maintaining neutral rating. Because, sometimes when you put a price target out on a stock, sometimes you have to lower it by 50%, I still say I am very envious of those two career paths, man. I really wish I chose differently because, as I always say, only stock analysts and weather meteorologists could be completely inaccurate and still get paid and still have their job. So shout out to all the analysts and all the weather people out there. But right now, the market cap is now down to 500 million. And I actually think it's going to go lower, believe it or not. I really do. I really think it's going to go lower. I have a feeling it's going to break this fib, and it's just going to kind of ride this bottom trend line here. Now, earnings coming in December 19th, a little over 25 million. So a couple of days before, it could have a little bit of a rally. But in my opinion, I do think we continue downward. And again, I'm basically just looking at the overall trend here of the stock and just the way it's been rejecting. It really looks like they either want to keep it flat or make it go lower. And unfortunately, that is because it is inconsistent. Right? If we just take a step back and we look at some of the high flyers in the tech sector, stocks like Nvidia, stocks like Tesla, could they be viewed as overvalued in the numbers? Yeah, absolutely. Absolutely. But also at the same time, you have to ask yourself, again, why? Find out the why. I keep saying this. And the why, as to why those stocks continue to get that high, is because of consistency. They were consistently coming out with new products. They were consistently seeing increases in demand. They were consistently beating on the EPS side and beating on the revenue side. They were consistently increasing their fiscal year guidance. They were consistently getting buy ratings from analysts, and they were consistently getting price target increases from analysts. Now we come back to FuelCell, and we look up some of the numbers. And we see inconsistencies on both the EPS and the revenue side. Meaning, what does this mean? Okay. Meaning, right here, 25.13, right? I can't tell you if the company is going to post 14 million or 34 million. I just can't tell you. And the reason why I can't tell you is because throughout history, going back these last 7-8 quarters, you definitely would have gotten 4 or 5 of these quarters incorrect. Minimum. If not 7 out of 8, 8 out of 8. Which means betting on this company's earnings will probably win you money less than half of the time. Based on history. Right? And what's my point? Well, I kind of said a bunch of things all at once. But my point is, this fiscal year revenue number is going to be huge. Right here, 126.17 million. And it's really going to come down to the wire. Because again, if we add up these 3 quarters here for 2023, we're at about 100 million, 101 million, I believe. And now they're coming in with 25.1 million, which would make it 126.1 million. And if the company happens to come in light, that will now be 5 consecutive years in a row that they have missed on annual revenue forecasts. So that's why I'm saying I have a feeling that they may not be done beating this stock up. And it's all going to come down to these numbers. And I know a lot of people don't want to hear that because they see it here down in the low ones and they think it's on sale. Should I just buy it? Listen, if you have that type of liquidity and you have decent income and you just want to buy stuff to see if it grows over the years, I mean, of course, that is entirely your own prerogative. But the point that I'm making is I would rather be late to the party and still have a good time as opposed to showing up early and then seeing that no one else is coming. And what that means is just because it's 115 doesn't mean it's a buy. And if they miss earnings, it might drop to 80 cents. Right? And you bought it just kind of hoping that they would beat earnings and the stock would go up over time. I personally would rather wait for these numbers to come out. Let it drop down to $1. Let them beat earnings. Let it spike up back to 140. Holy crap, I could have just made 40% in one day. Yeah, but it doesn't matter. Because most of you, I'm assuming, would want to hold this for the longer term, several years down the road. And when we're talking about a situation like that, what you want to do is you want to step in on high conviction. You don't want to step in on high hopes, right? So you buying here at 114, you're hoping it goes higher and it could go lower. If I wait for the company to beat earnings and it pops to 140, yeah, people could take profits and I can immediately take a hit and it could drop down to 130. But I would know with high conviction that I just bought a stock that just beat earnings, and if I just give it some time, it's probably going to go higher, and before you know it, will be at $2. That's the difference. That's why I always bring up a stock like Fubo. Fubo, phenomenal call by me. I always pat myself on the back for Fubo, one of my biggest winners. Same thing with Fubo. Fubo was coming out. They started to right the ship. Go back, look at the earnings for the last couple of quarters on Fubo. They began to right the ship. All of a sudden, profitability is up. It's coming in above expectations. Revenue is up. They're coming in. They're beating expectations. And what did I say? It was like $1.20, $1.10. And I was like, oh, Fubo is a buy in my opinion. And then what happened? They brought it down before they went up. And that's not, and I'm looking at the stock. It's like 85 cents, 79 cents, or wherever the hell it went. And that's why I always say, if I liked it up at $1 plus, I love it down at sub $1, right? Because I knew with high conviction, that's the difference, the conviction, looking at the numbers, I knew that at $1.10, $1.20, this was a $2 stock. I had that conviction. And now if it drops down to sub $1, I am either sitting there with no emotion, just waiting for it to come back up, or if I have the liquidity, I'm adding to the position, lowering my cost, and just waiting for the rally back upward. And it comes down to conviction and consistency. And if you go back, you'll see Fubo has been consistently coming in above analyst expectations, which is why Fubo is up significantly from when we first looked at it. But again, right here, multiple rejections on the moving average. You know, again, I know I'm all over the place, and I'm very honest. I tell you guys all the time, I don't write a script to do these YouTube videos. I know everyone else does. I just go, and whatever's on my mind, I try to relay to you guys. So again, I know some people may only watch for 2 or 3 minutes, hear my gist of the stock, and then click off and watch something else. But in all seriousness, you may be missing like a golden rule or a good tip or a good piece of advice here that I'm giving you throughout the rest of the video. So, my apologies again for going off on a tangent, but I'm just trying to cover all bases because I understand all of the different things that are going through your mind right now in this moment. So I'm just trying to really help out everyone. But, yeah, here in my opinion, it does still look weak, and I think it continues downward. And I think that there right now isn't really urgency for you to step in. Here on the daily, we can see again, multiple rejections here on the 50-day moving average. And also it looks like it's been struggling to even stay above the mid-Bollinger Band, as we see, even back here, June, July, when the markets were having their quote-unquote fake run that I called it throughout the summer. And obviously it turned out that I was correct. And basically, you can see the stock has been basically holding and rejecting below the mid-Bollinger Band. So now, it will most likely, as we see here, a little rejection, it will most likely potentially drop down and retest 98 cents. If it does drop to 98 cents, we could potentially have another double bottom because it just broke down to 98 cents. So obviously, you cross that bridge when you get to it. Don't assume tech patterns. Wait for what the market gives you. But here the MACD has crossed back to the upside, of course, on this big pump, but I think that was more due to this recent random market pump that happened in the last week and a half. So personally, I'm not sure if I would trust it. The RSI sitting here, it's still below 50, but Here on the daily, at least, I wouldn't use it as an indicator. As you see, the RSI back here dip below 30 and continue to slide along with the stock price. So that cannot be one of your indicators. On the weekly, however, we actually have a little bit of a different story. Looking here, you can see that as the RSI on the weekly basically touched 30, that's when the stock had a little bit of life and a little bit of a rally there. And then, of course, we sold back down. And then, as you see recently, as the RSI on the weekly basically hit that 30 benchmark, all of a sudden we had a pop. And we went from, $1 to 120, 127, or wherever the hell the stock went. So this may be a little bit of a better indicator for you to use than the daily RSI. But again, past performance does not dictate future results. I'm sure you guys have heard that saying before. And also, I wouldn't trust this MACD on the weekly. Whole time stock was dropping down, MACD was rising. Now it's just kind of massively flat, even though the stock continues to fall. So me personally, I wouldn't trust the weekly MACD. So right now, you have earnings coming up mid-December that the company has to beat, right? These are some positives. You have a weekly RSI benchmark number of 30 that you could potentially use to time a bounce and maybe, do a little day trade, a little scalp trade, make yourself a couple of bucks. And, what was the last one? I just had it. The book value. Yes, I'm sorry. The book value per share, $1.57. Right now, $1.14. So, again, unfortunately, if you're involved in the stock, you're just kind of having that wait-and-see attitude. If you're looking to get into the stock, again, if you want to buy it here, it's up to you. It's your money. It's entirely your own prerogative. Whatever you do with this information is up to you. But again, in my opinion, I would be patient. Let them show me the proof in the pudding. Let me miss out on 20, 30 cents. But let me know with higher conviction going in December that I am now in a growing company that is, only going to go up from here. Because in my opinion, they haven't showed it to me yet. But I'm going to end it there because I'm talking too much. So once again, to Stocks by the Numbers, I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky and volatile and uncertain. So I want to wish all of you success. Hope everyone makes a couple of dollars. Thanks for stopping by, and I'll see you guys in the next one.